D Street recovers from intraday lows to end flat, snapping a two-day gaining streak. Market breadth remains slightly positive. Nifty Bank outperforms.
Rupee hits a record low in early trade but recovers later. India's trade deficit narrows just to over $24 billion in November as exports rise and imports decline.
Corona Remedies makes a strong debut, lists at a 36% premium over its issue price. Meanwhile, Wakefit sees a muted listing. Stock ends 3% lower in trade today. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Sonal Bhutra. With me is my colleague Mangalam Malu. Mangalam, good afternoon. Well, we recovered a fair bit from the lows of the day today, ended above that 26,000 mark. The mid-caps, they were also lower in trade today. They were down around 70 points, but the market breadth was in favor of the advances today. Nifty, FMCG, PSU Banking Index, IT did really well. We did have some losers as well in the broader markets. But yes, we snapped that two-day winning streak, and that is what the day looked like today.
Yep, that is what the day looked like today. What was interesting, however, is that we were down, but perhaps not out. Why do I say that? Because yes, the Nifty opened lower, thereafter went further lower as well, closer to that 25,900 mark. From there was a near 100-point recovery. We ended about 19 points or 20 points in the red, but we ended above that 26,000 mark and very close to the 20-day moving average on the frontline index as well, led by both the IT index as well as the banking pack. Let's tell you what we have lined up for you on the show today. We start with the top movers and shakers of the day. PVR Inox shares, they rallied on the blockbuster performance of Dhurandhar as well. Amber Enterprises Management retains their bullish growth outlook, while Keynes Technology ended in the red after a strong rally in the previous couple of sessions, which followed a big decline that we saw earlier as well. And last but not least, all the key events that you need to watch out for tomorrow's trading session. So let's start with all the movers and the shakers. Hormaz is standing by at the wall to tell you what moved, what shook.
Well, topsy-turvy, but a range-bound session at least for the index. There was one pocket that was sulking all through the day, though. That was the auto space. And Eicher Motors, Bharat Forge, Sona BLW, all of them seeing losses of anywhere between 1 to 2%. On the flip side, the FMCG index did fairly well for itself after the underperformance on Friday. Britannia saw a bit of a rebound, as did HUL and Marico, gains of 1 to 2%. The newsmakers is an interesting list today. PVR Inox, as you just mentioned, off the highs of the day, but still ended with gains of close to 4%. Reflex Industries after the management clarification, and that's almost a 30-35% reversal from the lows of the day. Almost 17% higher, recovering everything that it lost on Friday. Shriram EPC after an order win, and Geojit Financial after that big block deal that took place earlier in the day, ending 8% higher. It'll be interesting to see who are the buyers in that transaction. A lot of the beaten down names on a year-to-date basis have done well in today's session. Shakti Pumps continues to move higher, third straight day of gains for the stock. ION Exchange still down 40% for the year, Praj still down 60% for the year, and Vishnu Prakash Puglia 5% gain in today's session, but still remains below its IPO price of 99 rupees. And lastly, some of the losers in the broader markets, Matrimony's buyback did not impress the street, stock ending 5% lower. VLS announced a buyback earlier, stock down 4.5%. Embassy Developments and PTC Industries too featuring among the top losers in the broader markets. Back to you guys.
All right, thank you so much, Hormuz, for joining us. So those were some movers and shakers in the market today. But the other big story that we are tracking is Rupee again hitting a fresh low, with the dollar hitting 90.75. But the Indian currency recovered after the November trade deficit came in at $24.5 billion, much lower than the $41 billion in the month of October. Lata Venkatesh is joining us with more details on this one. Lata?
Yes, it started off as another very weak day, and the fall was almost 0.5%. Was also not a fall accompanied by other EM currencies. 90.79 we saw, and 90.80 was a very important level where there are a lot of options written, we understand. The relief came because of the November trade deficit. November trade deficit, very important to note, $24.5 billion is the trade deficit. You know the number in October, 41.7 billion. So it's almost a halving of the trade deficit. And if you looked at our own poll was expecting 30 billion. So even compared to the poll, it's like 24 billion is a very good number. If you took goods plus services, then the deficit is only $7.5 billion, $7.28 billion. In the month of October, it was almost $22 billion. So that again looks very positive. the worry is about goods exports. Services exports have come as good as last month or last year. But goods exports was what we were worried, because dumping in Asia, US locked out for us. But goods exports are up 20% year on year for India. It's about over 38 billion against 31 billion year ago and against 34 billion in the month of October. More importantly, exports to the US are up by 1.3 billion. That was the one which we were worried about. Looks like if you take out all the exceptions and then the ability of Indians to compete in some areas, the export hit is not very much. So dealers are very happy to note that the fall in the deficit has come because the goods exports have done well, not just services exports, which were anyways doing well. But is that the end of pressure? No. The pressure continues because of the overhang of the trade deal, nowhere in sight yet, as well the FPI's non-stop selling. Every day you think that the market didn't fall so much yesterday. Will we get a good FPI number? And it is a sell. In fact, dealers are telling us they're selling out of bonds as well. Until now, at least bonds year to date is a plus $8.5 billion. But lately they've been selling because they're losing out on the currency. And therefore there is a worry. I mean, our worries have not gone away. There is also additional day-on-day pressure. Month ago, NDF market interventions by RBI are maturing today. That cast further pressure. RBI is supplying dollars, but it's not trying to protect any level. And that's why the weakness is not going away. There is a temporary relief.
Okay, all right. Thank you so much, Lata, for joining us with that analysis. To take this discussion forward, we are now joined by Sudeep Bandyopadhyay of Indie Trade Capital and Jay Thakkar of ICICI Securities. Gentlemen, good afternoon. Thank you so much for joining in. Before we talk about the fundamentals, Jay, let me come to you. We did see a fall today, but a recovery from the lows as well. What are the next important levels to watch out for on the Nifty now?
Good afternoon to you, Sonal. Sonal, I would say that the range for the Nifty has been pretty narrow, and that's been like 25,700 on the lower side to 26,000. Although we have seen the Nifty, in fact, again closing about 26,000 levels today as well. And despite being on the negative side, it has closed or managed to close about 26,000 levels, which is quite important going forward, as closing about these levels clearly indicate that the Nifty has a high probability of inching towards 26,300 at least by the next weekly expiry, right? And if we look at the cumulative OI or the open interest for the option side, the highest put open interest is at 26,000 levels. So, Sonal, till the Nifty is holding well 26,000, adding the probability of a bounce back till 26,300 and thereafter 500 is higher. Nifty will turn negative, or an alternate view from positive sideways to negative will only be below the levels of 25,700. So until those levels are held, I think one should maintain a bias sideways to positive. And similarly, as far as Bank Nifty is concerned, 58,500 to 59,000 range out there, Sonal looks quite positive. Until that range is held, the probability of Bank Nifty inching towards 60,000 is quite high. 60,000 is critical level for Bank Nifty, as that of 26,300 for Nifty. So further, momentum or bullishness on Bank Nifty would be about 60,000 levels only. And for that, the private sector banks have to really provide a breakout, as those have been trading quite sideways. From here on, one of the sectors which can support would be private sector banks, Nifty, IT, FMCG, metals. I mean, these are the couple of sectors which I think can help Nifty to provide a breakout on the upside and move higher in the direction of 26,300 to 500 levels.
All right, Jay, we'll also welcome Sudeep. Sudeep, two stocks that did well today, Amberent and Dixon Tech. These were not particularly well bid over the last 1 week or so. They've been fairly, sold off and selling off. Good comments coming in from the Amberent management. Dixon too, recovering from lows. Do you think after this recent correction of almost 30% from the highs, these are attractive levels, or maybe you'll wait by?
Well, Mangalam, definitely they are moving towards a zone where they become attractive. From my point of view, it's simple. If a company can grow at 40-50%, they can definitely command a multiple of 50-60. I think that's the situation where they are coming. And the management commentary does indicate that. Overall, the industry reports which are also coming out indicate that Indian EMS space can grow by 30-40%, continue to grow by 30-40% in the foreseeable future. Under the circumstances, the better ones will probably go higher than that. And obviously, a multiple of 50-60 I think would need to be accepted. Let's put it this way. So I would say that if you are a little aggressive long-term investor, there is absolutely no harm in buying into these stocks, even at current levels. Though the multiple valuation looks outlandish, but considering the growth possibility and growth path which they have, I think that's a value you have to pay if you want to be in it.
Right, so it's not just price to earnings, it's more like price to earnings and growth. PEG ratio is something that you are pegging your conviction on Amber and Dixon with. But the stock that did well today, PVR Inox, gained about 4%, supported by strong box office performance coming in from Dhurandhar. Total collections crossed 350 crore rupees after the second week, with optimism around the company's upcoming film releases as well. Ria Bhatia joins in with that. Ria.
Well, yes, Mangalam, as you were saying, PVR has done very well in trade today, and this is on the back of Dhurandhar's box office performance. Trade analysts have estimated that the total net collections have crossed 350 crores, and this will possibly also head towards 500 crores in the future. Apart from this is only the third film to have hit a triple century in 2025, and going ahead as well, on the 19th of December, Avatar Fire and Ash is set to hit the theatres, and that is also said to be seeing strong advanced collections. So for PVR Inox, Q3 is said to be a very good quarter for them, and this could also lead to some upgrades for the FY26 estimates.
Thank you so much for joining us with all those details, Ria. So that's PVR Inox. The stock ended higher in trade today. Let's get back our guests. Sudeep, first up for the questions for you. PVR Inox, there was a debate earlier that maybe we would not see a lot of these collections coming in from theatres because of the demand that we are seeing in OTT platforms. What do you have to make of PVR Inox now at these levels? Or if not this media stock, anything else that you like in the space?
Well, I think, it was a little too early when we were writing off theatres. I think the space coexists for both the mediums to coexist. Theatrical releases as well as OTT, So I think that's what is pretty much getting displayed. A movie like Dhurandhar will definitely do wonders for the PVR's numbers in this quarter. And there are the forthcoming releases also, the way they are stacked up does look good. So I don't think we should write off theatres this way. I think they have still a long way to go. So yes, we are positive on PVR. I think it's kind of a stranglehold on the market, and the quality of releases which are coming should see good numbers from them.
All right, good numbers should come in for PVR Inox. Jay, from a chart check standpoint, do you think it's reversing its earlier downtrend and perhaps it's on an uptrend?
Well, Mangalam, I would say it's not that a clear trend. It's just
Okay.
is what we are seeing right now. So I would say rather those who are stuck at the high levels could exit.
All right, those who are stuck at the high levels could exit. Have you watched the movie?
I'm yet to see that, Mangalam, and I would like to see it maybe, probably coming weekend, or maybe during the, Christmas vacation period.
All right, maybe that is what the analysts are estimating as well. The 350 crore goes up to 500 crores by virtue of people like you and others watching it. Sudeep, you said you watched it. You raised your hand.
I did watch it. So I'm a part of that 350 crore.
Take that point. All right. Let's go across to, Upasna, who joins in with the news on Amber Enterprises. We alluded to, what could have led to that up move, but let's get into the details. We have Upasna joining in with what the management said in the analyst meet.
Well, positive commentary is what we saw today, and the stock certainly reacted on the back of that positive commentary. Now, management has reiterated their guidance, implying a strong 13 to 15% outperformance to the industry peers in consumer durables. For overall FY26, the company expects 10 to 15% YoY growth in RAC segment and 35 to 40% growth in company's electronics segment. Now, consumer durable demand has improved sequentially is what the company has emphasized, while there is still channel inventory in the system for RACs. Now, electronic division, which is the second most biggest growth driver for the company said that the growth will outperform the other segments led by new client additions and even acquisitions. Company has also indicated industry-leading growth in its AC segment and believes that the growth outlook for the non-RAC segment is likely to be much stronger in the medium-term time frame. Now, most of the focus of the discussion was around company's electronics segment. So overall, certainly a positive commentary, and we saw the stock surging on the back of this positive news.
Thank you so much, Upasana, for joining us with all those details. Jay, there's been so much happening in the EMS space. From a technical perspective, any stock which comes on your radar?
Well, see, overall, this stock, this sector, we have seen, broadly, it has, we have seen a good amount of selling coming in, especially, when I look at the stock like Amber, we've seen clear shorts getting built up out here. And Sonal, we have seen short covering also happening since past couple of trading sessions. The stock has also taken off its crucial weekly swing of 6,700. So now I believe that till 6,600, 6,500 levels are held, there's a good chance of further short covering coming in this stock. And if it moves beyond the levels of 7,000, then probably going forward 7,500 can't be ruled out as well. So from here on, at least from the short-term point of view, from the short covering point of view, the risk reward is on the long side.
All right, risk reward is on the long side. With that, we thank both, Sudeep and Jay for joining us on the show and giving us your views on a whole host of sectors, stocks as well. Just before we let you go, Sudeep, do you like the consumption space?
I do like quite a bit.
The FMCG pack was doing well today.
Yeah, I think it's high time FMCG starts doing well. Look, there were a lot of challenges FMCG faced. Rural demand problem, urban demand problem. I think, this festive season and, in India, festival continues till about February. So this is the phase where I think we will see a lot of consumption pick up. Look, to expect GST rationalization to benefit consumption was little unrealistic. That will benefit consumer durable. But the overall traction of the economy should help FMCG. And that's exactly what is happening during this festive period.
Okay.
Any one particular stock that you want to recommend?
Well, HUL I've been recommending for quite some time. It has moved up quite a bit. But I think one can look at Godrej Consumer also, because they have a international business as well. And that's also have started doing well. They have started filling the gaps in the portfolio. And we are positive on Godrej Consumer from a long-term perspective.
Okay, all right. Gentlemen, thank you so much for joining us with your thoughts and insights on individual names and the markets going forward. With that, we'll do one thing. We'll take a short break. When we come back, we'll talk about the top corporate voices along with the key market events to watch out for on the other side.
Welcome back. You're watching us here on Corporate Voices. The top corporate voices that we had on our channel today on Markets Forward. Corona Remedies listed at a premium of 36% to its issue price. Speaking to CNBC-TV18, the MD and CEO, Nirav Mehta, said that the company aspires to grow 1.5 to 2 times more than the industry, driven by deeper penetration across key therapy areas. Also expressed optimism about the GLP-1 market.
Wakeford made a muted debut on D Street. The stock ended over 1% lower. The co-founder of the company said the company's furniture business will be the key margin driver going forward. He said ongoing capacity expansion in furniture could help the segment deliver up to 3 times revenue growth.
Right, and defense PSU major BEM expects strong order inflows over the next 2 to 3 quarters. Speaking to CNBC-TV18, Shantanu Roy stated that the company is likely to end FY26 with an order book of upwards of 20,000 crore rupees.
And before we wrap, we bring you some key market events to watch out for. Our colleague Upasana is standing by with the key events to focus for tomorrow's trading session. Upasana.
Well, first up, let me start with the global economic cues. US will be reporting its unemployment rate and even S&P Global PMI data. UK unemployment rate and Japan S&P Global PMI data will be out tomorrow. Now, let us look at the key stocks that will be in our focus today on the back of corporate action. Canara, Robeco, AMC to consider interim dividend, Fusion Finance, both to consider fundraising by issuance of NCDs via private placement basis. Vikram Solar will also be in focus as the board will consider and review various business divisions. Now, on the IPO front, KSH International opens for subscription tomorrow, while on the flip side, ICICI Prudential AMC closes for subscription. Now, let us look at some of the key important events for tomorrow. European Commission is expected to reverse EU's effective ban on sale of new combustion engine cars from 2035. Now, WTO General Council meeting in Geneva also begins tomorrow onwards till 17th of December. And lastly, IPL auction begins and the 2026 Indian Premium League auction is set to kick off tomorrow. So all in all, looks like quite a power-packed day tomorrow.
Power-packed day indeed, Pasna. Thank you so much for that. With that, we are out of time on this edition of Markets Forward. Thank you so much for watching. Back with more news and updates. Stay with us.